All right, good morning, trade pros. Welcome to our morning market update for Friday, December the 7th of 2018. We're getting close to Christmas, and it's exciting. The holidays are always an exciting time. We're wondering whether or not there's going to be a Santa Claus rally this year, and I'm all for it. I'm the trade pro Santa Claus. So is Victorio. I'd move the camera, but it usually freezes. We all got our Santa hats on. We got a great video coming out this weekend on whether or not the Santa Claus rally is a real thing. I'm going to present some stats to you guys. Have been putting the numbers together. It's a very exciting video. That's coming out on Sunday. Let's start out with a little morning market fun fact. On this day in 1999, Yahoo was added to the S&P 500 index, sending the stock surging 32% on the day it was added. All right, just a little fun fact, that's all. Yesterday, markets rebounded into the last hour of trading on two reasons. Number one, there was a report circulated out there that the Federal Reserve is considering how to communicate a slower policy change. So they're going to look to how to tell the markets, look, we're going to start slowing down the interest rate hikes. They're going to be more gradual, less aggressive. Let's rein in that interest rate hike cycle. And they're considering, how do we do it? How do we alert the market without them freaking out? I mean, it's going to be bullish. And also, how do we start telling the market that we're not quarterly, every single meeting month to month is live? So they could raise January, February. They don't have to wait till March, June, September, December. They could do it at any monthly meeting in between. Hang on. OPEC producers has started. All right. So that's what pushed the market up. That's number one. In the last hour, the Dow reversed 730-point downside. Think about that. That's crazy. The second reason is the plunge protection team came out. The PPT is a known phenomenon in the markets. I'm not going to say more about that. And the last reason is this. I know I said two, but there's always going to be three. The 21st is when the futures expire for trading. So the second Friday of a month tends to be the market low before an option expiry, especially on a quad witch. I know it's not the second Friday. We're still on the first Friday, but we're gearing up to get to that point where markets start to bottom out. All right, and then rally. And then there's going to be a Christmas rally, and then January affects a strong thing as well, which we're going to make a video on also. So a lot of reasons that equities pumped up like that into the last hour. Very bullish reversal yesterday. Today, it's a big test. What are we going to do at these resistance levels? If buyers could gather momentum, we continue to push higher, you're going to see more upside and very quickly. All right. In Asia, Japan's up 0.8%. Hong Kong's down 0.4%. China's flat. India's up. Is that a fly? The fly likes coffee. Who let the fly in? Oh, man, that's going to distract me so much. Almost killed the fly. Victoria, you brought in a fly. Yeah, we have a new friend, guys. What's up, Marky? No, but there's actually a fly flying around. Anywho, I got distracted. Sorry, YouTube. In Europe, at midday, London's up 1.4%. Paris is up 1.3%. And Frankfurt's up 0.5 percentage point. But DAX yesterday officially entered a bearish market territory. All right, down more than 20% out of Germany. Futures in the United States, they're still down slightly, although it looks like they've reversed some of those. They're now up to positive. They're right at where the day closed. So we've rebounded from some of the lows overnight. So we're getting a bullish push here. And it's all because of crude oil, and I'll tell you why. Crude oil pre-market, we just went to the pit open now. Pre-market was up 4.6%, $2.40 a barrel. It's already up this morning, and in a huge bid. The reason being is that OPEC and non-OPEC members, the meeting just started, by the way, but there was talks that they're going to enter into agreement today. And so on rumor, traditionally like oil, it rallied. Here's what I'm going to tell you. If this is confirmed, I don't know if there's going to be that much more rally, because you know how oil moves. Rally on rumor, sells on news. That's just the truth on oil. If you understand that, you've probably been trading oil a long time. So here's what OPEC and non-OPEC members agreed to. They agreed to a cumulative, or are going to agree, it's not a final agreement yet, to a cumulative output cut of 1.3 million barrels per day. All right. And they're going to use October levels as the reference levels, where compliance was 104%. Don't ask me how you can comply more than 100%. 104. The deal would be OPEC would cut by 750 to 800,000 barrels, and then the OPEC plus nations that aren't part of OPEC, Russia, would cut 500,000 barrels per day, effective as of this meeting. All right. Just a reminder that Russia came to the table and said, hey, we want to increase the cut. They basically want to cut more aggressively to support the price of oil, which is very odd because just days ago, Russian Energy Minister Novak was saying, we don't want to, we're not sure about this. And I think what OPEC was trying to do is to calm the market down so they could have their meeting. And, you know, it's manipulation. It's market, any other world, any other currency, any other asset, product, anything else, job, it's market manipulation. OPEC, it's just OPEC. That's the way it works. They control the supply of one of the biggest commodities in the world. You know, think about it: plastic, heat, oil, obviously gasoline, everything they use, a lot of things that we consume, plastics mainly. It's all oil. All right. Gold's up 0.3%. Bitcoin's down 10%. Bitcoin's getting just destroyed on an SEC decision to delay review of an ETF that wanted to go public. So they pushed that to February 27th. 10-year Treasury yield's up a little bit. On today's economic calendar, we have natural gas inventory at 10:30. And we have Baker Hughes at 1 p.m., which is the rig count for oil. That'll impact oil prices. But right now, the biggest thing is this OPEC meeting in Vienna. There's going to be some kind of agreement reached around 10:30 to 11. That's usually when it concludes because it's late there. All right. 8:30 in the morning, we had a super important release that comes out once a month. It's a jobs report. And it was called the non-farm payrolls. It's a 3-tier report. You guys can look at some of our older videos that we talk about it. If you go back to the last Friday of the previous month, the first Friday of the previous month, first Friday of the month before that, and pretty much 4 years back, we have a video. Well, I wouldn't say 4 years, 2 years. Let's be real. All right, so here's what we were expecting: 198,000 jobs to come out. 250,000 were added in the month of October. In November, we expected 198,000, which is still less. And the number came out at 155,000, totally missing. There was a dud. More importantly, though, the last month number was revised lower from 250,000 to 237,000. So you got a miss on the front month and a miss on the back month revision. That's no good. That's bearish so far. But is it? I'll tell you why it's possibly a bullish thing. I think we're in a bad news is good news scenario right now. I'll tell you why. November average hourly earnings, that's the amount of money people make per hour. So this report's threefold. How many jobs are added, how much pay is in those jobs, and I'm going to kill this fly and possibly hurt myself in the process. I don't want to kill it. I just want to catch and release. Oh, I think I got it. No, I didn't. Distracting, guys. Very distracting. I don't know how a fly got in our offices. We have a very tight security system. Now, November average hourly earnings, 0.2% versus 0.3% expected. So it's lower. All right. On an annualized basis, it's down 0.1%. So the fact that we're getting lower average hourly earnings means that the pay is not as high. So if you think about it, there's less jobs now. And because there's less jobs, there isn't as much competition. Actually, there's more competition for these jobs, but they're paying less. That's not a good sign, which would probably mean, and we're going to dig through these a little bit more over the weekend and present them on Sunday to our subscribers, but it would probably mean there's more jobs that are added that are part-time, that are service-based, that aren't a forever type of job. It's just to pay the bills. And that'd be interesting to see. And if you think about what happens around this time, what are those jobs? Seasonal employment at your department stores for the expected rush of Christmas shopping. All right. November unemployment stayed at 3.7%, matching the lowest since 1969. No movement there. More people jumped into the workforce, 162.8 million labor force versus 162.6 prior. So there's an increase there. All right, so more people are going to jobs. More people are jumping back into the workforce. And that's what's driving the 3.7% and record low unemployment. All right. So overall, let's recap this. Overall, this report comes out as a miss. Why could it be a good thing for the market? Well, look at this. One thing the Federal Reserve has always been preaching is that we've had a really tight labor market. Tight labor market means it's good. There's no slack. There's employment. Everybody's abundant. Everything's great. Now you're seeing a miss and a back month revision heading towards a December rate hike decision coming up. They are going to hike rates for December because the market's already priced it in. But now you're also seeing a Federal Reserve report of them looking to communicate a message of slowing down their rate hikes. All right. And all that is just really translating to, hey, look, bad news right now means the Fed won't hike as much. They'll hike less, and that's good news for the stock market. And if you look at it, the dollar's down, equities are up, and oil is just ripping higher. So risk on is the sentiment this morning. What you need to find out is on the open, will the volume be coming onto the risk on sentiment? How do you find that out? Well, number one, you look at it for a rally, and if the rally's happening and volume's increasing, it's a good sign that there's going to be some institutional buying because they're starting out early on. I'd tell you today to take the first 5 to 10 minutes after the open and just watch. There's no need to jump in there. And I'm going to share this last tip with you guys. Actually, no, I'm not. I'm going to make a whole video out of this on YouTube. It's a great tip, so stay tuned. All right, this morning we're looking for the bullish side. As long as we get through yesterday's close, I think we're going to see some volume and release some buy stops, and we're going to go for a nice strong close to end the week in equities and in oil if this OPEC meeting's confirmed. All right, I just heard Russia said it's important for them to continue their cooperation with OPEC countries. So this is good. It looks like the agreement's going to come due anywhere between 10 and 11 a.m. as this meeting concludes. It'll become official, at which point we'll be trading oil. All right, that's what we got, guys. You have yourself a great weekend. I hope you enjoyed this morning market update. There was a lot of info to get through, but we actually did it. We covered a lot of ground. It's a pretty complete morning market report. Wouldn't you guys agree? Comment below if you agree that this is a great morning market update. The more comments you get, the more likely that we are to continue doing them. How's that for soliciting comments and feedback? All right, I appreciate you guys. I hope you've had a good week with us. I hope you had a great week personally as well. Enjoy this weekend. Take some time off to relax because we work a hard job. If you're doing this full time, especially if you're trading full time, this ain't always easy. I'll be the first to admit that. But man, is it abundant and rewarding when you're doing it properly. That's the beauty of it. And you work 2 hours a day, and I love it. I usually finish trading at 11 a.m. unless there's some blockbuster opportunities. On non-farm payrolls, sometimes I finish even earlier. I've had one trade today. It was green. I got to keep going. All right, guys, take care. Have yourself a great day. I appreciate you. All the best to you and your families. Use this weekend to relax a little bit and get ready for the holidays. And I'll see you guys on Monday at 9 a.m. Eastern. Take care. Have a great day and weekend, and goodbye. What would you like from Santa this Christmas, Marky? I'm in a giving mood. The one thing that I can't give you. Go figure. Yeah, geez. You should be more materialistic, Mark. Yeah, that's good. It is, I agree. All right, trade pros, let's zoom in on the charts. I'm going to show you guys some great levels for trade opportunities and for oil as well. A lot of volatility around oil prices. I think we're going to have some awesome trade setups there. S&P 500 is getting bullish as well. I'll show you a level above which we got to break to start actually buying with seriousness. And right now, it looks like you fade a little bit down in the VWAP, but I never really like fade trades in the middle of momentum. They're deadly. That's a good way to lose money. So let's get started.